Welcome to the Capital News. I am your host, Alex Karitis. Today is Wednesday, April 15th, 2020. Thank you so much for joining me. Title of today's podcast is No Earnings? Who cares? Who needs earnings when you have a printing press, right? Because we're starting to see some of these major corporations announce their earnings. Banks are just falling through the floor. But you have a stock market, that just, it was obviously down today. The markets were down today if you've been paying somewhat attention. But over the course of the past few weeks, we have seen this monster rally. And of course, you have so many on Wall Street and the financial media just saying, okay, well, the bear market's over. Okay, go away, go back to hibernating. You dropped 35% over the course of a few weeks. Fantastic. Bear market came. Quickest one ever. Now it's over. I mean, this just does not make any sense whatsoever. They are completely ignoring the facts that are in front of us. Banks are building up massive reserves, getting ready for the wave of defaults that are going to take place. No ifs, ands, or buts about it. Across the entire spectrum. And remember, ladies and gentlemen, because we were talking about this for quite a while, most of these problems, the rise in delinquencies, was already taking place prior to the onset of COVID-19 and these shutdowns, lockdowns, quarantines, whatever you want to call them. The global economy, including the United States, was already going down. Period. Stop. COVID-19 is just proven to be a huge pin that has pricked the everything bubble. It would have been something else. Make no mistake about it. And don't forget this. Make no mistake about it. It would have been something else. It would have been a company that nobody thought possible that could have went bankrupt. Could have been Boeing. Could have been General Electric, General Motors. Could have been Ford. Somebody else. Could have been a country. Could have been Hong Kong. And we're still waiting for Hong Kong to collapse because it will. Could be China. We're waiting for China to collapse because it will. Biggest Ponzi scheme, magic trick almost ever perpetrated on mankind. It's up there. Okay? The Australian real estate market in conjunction with a whole host of other sectors in that country. Canada, same thing. The list goes on and on and on. Make no mistake about this. COVID-19 was just a pinprick. It would have been something else. You can only play this game kicking the can down the road for so long. The piper always wants paid, and he always gets paid, and he's here to collect. And that's the end of the story. Are you prepared? Are you ready for what comes next? Because despite all this, we're still told this is, one of the greatest economies ever, which is laughable on its face. Because how could that be? Because we've been shut down for, a month? And people are broke. So how can you have the greatest economy ever, you get shut down for a month, and people are broke? Can't make ends meet. Can't do it. It's because it wasn't the greatest economy ever, ladies and gentlemen. You know this. Don't lie to yourself. Don't believe lying politicians. Whether that's a Republican, a Democrat, somebody in the Senate, somebody in the House, somebody in the White House. Don't believe them. They're the ones who got us into this mess. They're the ones who continue to kick the can down the road because none of them are leaders. None of them will stand up and tell you the truth. There's too much gravy for them. It's too easy for them to kick the can down the road. It's too easy for them to blame the other side. It's a wrestling match. It's a wrestling match. It's all this is. It's staged. It's staged. Some adults still like watching wrestling, so that's where they go. Others, they like politics. So, it's all it is. It's just arena. It's just sport. It's all lies. Hope you're starting to understand that. Because it's in your face. Again, they're not even hiding it anymore. Toto pulled away the curtain, paid no attention to the man behind the curtain. No, look at him. He's right there. He's in your face. Trillions of dollars to Wall Street, banks, corporate America. No restrictions. Nothing. Blink of an eye. Flip of a switch. Small, mid-sized businesses, which they always want to praise. Oh, that's the heart and blood flow of America. That's the spirit of American entrepreneurship, American capitalism, blah, 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 blah. Yet these people are boarding up. They're shutting down. trillions to their cronies. And they're already running out of money, so they say, on the fund for small and mid-sized business, which I believe to be the case. And that's what they're fighting over. Yet there's a lot of strings attached with that money. There's going to be a little bit more oversight with that than compared to what the hedge funds get, what the private equity gets, what BlackRock's doing with the money. Again, the fox in the henhouse. Nobody cares. It's right in your face this time. But this time is a little bit different than what it was a decade ago. This time, you get a check for $1,200. And again, it is pardon me. It is sit down and shut up money. That's what it is. Make no mistake about it. And there's very likely going to be another check sometime in the future because this is just the tip of the iceberg. There is not pent-up demand. The banks know it. The politicians, to some degree, know it. And if you're honest with yourself, you know it as well. We've done this to ourselves. The title of one of our podcasts a week or so ago was April Fools, right? It's not just the politicians and the central bankers, it's us. We're the fools too because we've allowed this system to go on. And of course, the people who are, quote unquote, the winners, who are getting all of this free money first and benefiting from it, well, they say, well, if we're going to continue getting away with it, why are we going to stop? Because I get to have not one home or two homes or three homes. I get to have a vacation wherever I want, whenever I want. I get to have all these toys, get to do and go wherever I want, when I want. Why would they stop that? Why would they ever think twice about how that affects somebody else down the line? Those types of policies. They don't. They don't. And that's what we're all witnessing. And again, it's those very individuals, it's those institutions, it's those corporations that are getting the biggest bailouts. And quickly, as quickly as possible. We talked about here yesterday how hedge funds and private equity are lining up, claiming that they are small businesses. So they need to be helped out too. Well, guess what, folks? They're already getting the money because the Federal Reserve is already buying a lot of their investments, the things that they already hold. They're flooding the stock market with money, okay, obviously through a secondary nature, but they're doing it. They're buying up bonds. They're buying up investment-grade bonds. They're buying up junk bonds. Hedge funds, private equity, they own these things. So they're still going to get their coupon. Instead of what would naturally happen, taking a huge haircut, instead of getting paid back all of your principal 100%, typically in this type of event, well, you'd be lucky maybe if you pay in 70 cents on the dollar, and you're going to have to take it. Well, not now, because the Federal Reserve is going to come in and buy up all this junk. So you're going to continue to collect your coupon, and you're going to get most of your money back in principal. Yet they're still complaining, yet it's still not enough. Yet they still have to try to jump the line in front of a restaurateur or a nail salon owner or any other type of small business out there who is in dire need of a little bit of cash. Now, I'm not saying it's right that the small business gets it either. You understand my opinion and analysis on all of this stuff. Nobody should get a bailout. This is ridiculous. But when you're going to give trillions at the drop of a hat to the very institutions and individuals who have caused this problem, well, then why aren't you going to give it to the people and the businesses that you claim are the heart and soul of this country? Why do they have all of these hurdles? Why is it taking so much longer to get into their pockets? You know the answer, because you know who's really pulling the strings. You know what this is all about. It's about consolidation, and they're going to get it. No ifs, ands, or buts about it. So the markets were down today at the time of this podcast. In the futures, we have the Dow, the S&P, and the NASDAQ 100 all down slightly. The Japanese markets are down 1.5%. Across the board in Europe today, they were down 3, 4, almost 5%, depending on the index. Australia is trading. They are also down 1% at the time of this podcast. The dollar, a little bit of a reversal because it's been getting battered against a basket of currencies, but it has strengthened over the past day, somewhat of a flight to safety, I guess. No surprise here. We understand the dollar shortage. It's just a matter of time before, I guess, the markets catch up with that reality once again. You can have as many swap lines from the Federal Reserve as you want. It's not going to make a difference. It's not. When you understand the trillions and trillions of dollars that are outstanding in U.S. denominated debt, it's just That simple. It's not enough, and the dollar is going to appreciate in its final swan song. Okay? So commodities, we were talking about this heavily yesterday. The time of the podcast yesterday, crude oil WTI was at $20 a barrel. That's where it remains right now. Brent was around $30 last night. Right now it is at $28.18 a barrel. So there you have it, folks. I mean, OPEC plus 10 million, 20 million. Pick a number. Pick a number. There's no demand. No demand. And if you want to see it visually, check out our website, thecapitalnews.com, or our YouTube channel, The Capital News. We posted a video. Check it out. Oil and gas, boom or bust. All right? About 15, 20 minutes long. It's a visual. Take the time to understand this stuff. Natural gas also down, almost testing its recent lows, trading at $1.59 per million British thermal units. Gold and silver continue a little bit of a pullback. Gold is trading at $1,714 an ounce. Silver is at $15.36 an ounce. Uncle Sam's U.S. 10-year Treasury is yielding 0.64%. Last night it was at about 0.75%, so a pullback there in yield, meaning there was some buying going on in the bond market. Again, seemingly a flight to safety. Why there was ever a flight to risk is beyond me, but, you got crackheads on Wall Street. What do you expect? That's what they're going to do. But I think, the parade is going to get rained on once again. Reality is going to come front and center once again, and it's just not going to be ignored. It's just not going to be ignored. We have retail sales coming out today, down 8.7%. Worse than the depths of the great financial crisis a decade ago. Okay? You understand what's going on here? U.S. industrial output falls the most in 74 years. Total industrial production in the United States slumped by 5.4% from a month earlier in March. The largest drop since January of 1946. All right? That's industrial output falls the most in 74 years. And of course, 1946 coincides with the end of the war. So we were done building tanks and bombers and ammunition and all that jazz. So that was understandable. This, of course, blame it on COVID-19. Nothing else to see here. There was never any type of overproduction, any type of over-market saturation. None of that ever took place because of the effects of easy, cheap money for the past decade, and now they're doing it on steroids. Give me a break. Give me a break. We've been talking about this for months. Look it up. Greatest economy, my rear end. Hits just keep on coming. A couple other things I came across that I thought were interesting. And this goes to some of these zombie companies that we love talking about here. Well, here's an interesting one for you. When it comes to no earnings, who cares? I mean, this is it. Thanks to the Federal Reserve, 1 in 6 of S&P 1500, not the S&P 500, but a broader basket, S&P 1500 companies are now classified as zombies. As defined, interest expenses exceed cash flow versus 2% in the 1980s as the Treasury capitalizes SPVs, which again is another BS acronym, special purpose vehicle, which is something that the Congress had to come up with so that the Federal Reserve could bypass its very own charter so that they can fund the government and give the Treasury and Donny Boy $500 billion, which they can turn into almost $5 trillion, and don't worry about a thing. And the Fed provides 10 times the funding to buy toxic assets off balance sheet. Fantastic. See why I'm saying no earnings, who cares? Because 1 in 6 S&P 1500 companies are zombies. Interest expenses exceed cash flow. 1 in 6 is about 17%. 1980s, it was 2%. So don't tell me things are getting better. Here's another interesting one, which has been consistent with what we've been talking about here for quite a while as well. Here's some data from the Federal Reserve and from Goldman Sachs. Title of this chart is, Who Will Buy $3 Trillion of U.S. Treasuries? And then you have a subtitle here, Annual U.S. Treasury Purchases by Sector, with Goldman Sachs projections for the year 2020 in billions of dollars. And they give data going back to 2018, 2019, and then their projections for 2020. And again, the title of their chart is Who Will Buy $3 Trillion of U.S. Treasuries? Because remember, Uncle Sam is as broke as a joke. He does not have money. Because the people of this country do not have money. So this works. So here you have sectors broken down. You have the Federal Reserve, you have foreign officials, you have households, you have pensions, you have asset managers, money market funds, foreign private, banks, brokers, dealers, and other sectors. Well, take a guess at who's buying the mother lode of $3 trillion of U.S. Treasuries. You guessed it, you know it, because we talk about it here all the time. The Federal Reserve. Nobody else is buying it. You know, it's a good thing. I had a thought today, and I know I'm not supposed to think. We're just supposed to do whatever the man on the television tells us. But I had a thought because, you know, the Federal Reserve's buying junk. Are U.S. Treasuries junk yet? Because nobody else seems to want them. So wouldn't you think that without the Federal Reserve buying them, that yields would just spike? And what happens when yields spike, right? It's like junk. That's junk. And they should be. Because Uncle Sam is as broke as a joke. If the only way he is going to be able to pay this back is through a printing press, well, then we're no different than Venezuela, or Iran, or Turkey, or Argentina, or the Weimar Republic, or Zimbabwe. So we're a banana republic. So the Federal Reserve, according to Goldman Sachs, is going to purchase over $2 trillion of the $3 trillion that they are expecting is going to come out there. Because don't forget, expectations for fiscal year 2020, the deficit, just the deficit is going to be $3.8 trillion. That's if we're lucky. So the Fed is going to be buying $2 trillion, a little bit over $2 trillion of the $3 trillion, according to Goldman Sachs, which is, of course, over 60%, almost 70%. Foreign countries, nope, ain't happening. They haven't been buying in 2018, not in 2019, and Goldman Sachs thinks that that is going to continue in 2020, and I agree with them. They don't want it because it's junk. And all of those central banks are doing the same thing with all of their government bonds, which are junk too. Households, that's going with a negative trend. Pensions, negative. Why? Because pensions are going bust. Why? Because pensions need to make 7 or 8% per annum. They're not making that kind of money. Not even close. The average pension is only 70% funded. You understand this? The average pension is only 70% funded. There is only 70 cents for every dollar available to make good on the promise. So where's the extra 30 cents going to come from? And that's the average, folks. There are some states, 15 cents to the dollar. I think that's Kentucky. Recent research I've come across. You see the exodus of people leaving states, leaving Connecticut, leaving California, leaving Illinois. All of the unemployment, the recent initial claims, the shell, the energy we talk about, the shell bust, greatly affecting states like Pennsylvania, which is already suffering from pension shortfalls to begin with. Now you have a whole bunch of people out of work. Where's the money going to come from? All these states are bust. Pensions are going to go bust. So pensions aren't buying them. And with a market sell-off and the market sell-off that's coming, it's only going to get worse. Asset managers, no, they were trending up for the past couple of years. Now it's a big drop-off. They're not going to be any type of net purchaser of U.S. Treasuries, according to Goldman Sachs. Money market funds, they will start buying up more. That makes sense. If you get your money into cash in a 401k or IRA, it's going to be settled in a money market. They're going to look for safety. They think U.S. Treasuries are safe, so there you have it. Foreign private investors been holding up for the past couple of years, but according to Goldman Sachs, that's now going to turn negative. I happen to agree again. Banks will be net buyers, but why wouldn't they? They're backstopped by the government and by the Federal Reserve, so they might as well try to get something out of it. Brokers, dealers, nothing to write home about. Same thing with other sectors. So there you have it. Who will buy $3 trillion of U.S. Treasuries? The Federal Reserve. Because nobody else wants them. And isn't that a sad thing? That nobody wants Uncle Sam's debt, nobody trusts it. I mean, everybody's out of money, for one thing, including Uncle Sam. But, people don't want them. Foreigners don't want them. Asset managers don't want them. Even pension funds don't want them. Because they got to go further and further out onto the risk curve. They're some of the biggest crackheads out there right now trying to chase this monster rally. Oh, please, God, give me something here. You got 2%, 5%, 10%, maybe a quick buck. Come on, let's go. These people are going to take a bridge when this is all said and done. No earnings, who cares? You know, how many titles have we done here in the recent past with a similar thing? The truth, who cares? What difference does it make? All these types of things. These are horrible, horrible titles for what we're talking about. But unfortunately, it's the truth. You want to turn on Fox, you want to turn on CNN, MSNBC, you're all going to hear something different. Want to listen to the president blabber for 2 hours? Well, you got that every single day. I don't even listen anymore. I don't even watch the news much anymore. I read my articles. I look at the data. I know what I'm talking about. I know what to look for. I don't need some idiot on Fox or CNN or MSNBC to tell me something. You know, because if you even when you watch, even for a few moments, a lot of these financial stations as well, CNBC sticking up for the Federal Reserve, saying, well, what else are they going to do? They're doing the right thing. They are supposed to be a network, a station, devoted to the ideals and principles and the practice of free market capitalism. Well, clearly in the minds of CNBC, there can be no failure. There can be no restructuring. At least not for the big guys, right? No, you got to save all of them. Too big to fail? No, not a problem. Let's make them even bigger. Let's make them even bigger systemic risks. Don't worry about a thing. It's a joke. How can you take these people seriously? How can they look the camera square in the face, meaning basically looking you square in the eye, and tell you this garbage? Well, we know how, because I tell you all the time. These people get paid big money, and they are going to repeat, and they are going to say what is ever on that teleprompter, because their livelihood depends on it, and they like the salaries they're making. That's all it is. It's just a big game. It's just a big charade. It's all commercial. Stocks aren't allowed to go down. There can be no price discovery. So here you have it, folks. This is sort of our fork in the road. Here's what could potentially happen, right? You could have the Federal Reserve, the federal government, in conjunction with other central banks and federal governments the world over, pull the proverbial rabbit out of the hat and quote-unquote save everything. And off to the races we go once again. Another melt-up. That'll be a complete loss of markets. Completely gone. They are shot. You can go that route, and of course, the inevitable will occur. The same thing we're witnessing now. It'll just be that much worse. If they're able to do this, it's a big if. I am very skeptical and doubtful that they will. I hope they don't. The other choice is there might still be one last breath of a market economy. And if we go down that path, that too is going to be painful. But it will be a part of the deleveraging that the market requires. It'll be a part of the restructuring, the bankruptcies, the negotiations between creditor and debtor. That's what needs to happen. That's what needs to take place. It will be painful. It's going to be extremely painful. It's going to be extremely painful no matter what road we take. But those are the options. Which one do you want to go down? You're going to have to deal with pain either way. But do you want to continue with the magical, mystical illusion of central bankers and politicians? Or do you want to actually go with something that we haven't tried here in a long time in this country? Free market capitalism. Maybe we should go back to what made this country great to begin with. But that seems to be the last option. Nobody's even talking about it. The president doesn't talk about it. Republicans, fiscal conservatives no longer exist, if they ever did. Democrats, of course, aren't going to talk about that because they think what we're witnessing is free market capitalism. I mean, what don't you understand? There is no free market capitalism in this country. Printing money is not capital. If there is no failure, there's no market. And if you're being told what to do, when to do, how to run your business, then you're not free. So what part of free market capitalism don't you understand? These three words don't combine and make something else. They are what they are. Don't read into it further than that. Don't buy into some argument from some liberal professor or somebody who believes in socialism or communism or some other load of BS. Understand those definitions, put them together, and what do you got? That's it. It's that simple. There is no free lunch. I understand nobody wants to go through the pain, but printing money is not a solution. If it was, all of those countries that I rattled off before would be the wealthiest, most prosperous nations in the world. But they are not, because that is not a solution. That does not work. Never has, never will. It goes a little further here in this country because we do have the world's reserve currency and we have a military that'll show up on your doorstep if you test us. That's the military-industrial complex, okay? We talk about that here plenty as well. And they're trying like hell to bid up the price of oil, and it ain't happening. Which is why I grow more concerned every day that they're going to ending up taking us to war once again, because that's the only thing that'll keep those prices jacked up. It's the only thing. Or you have inflation and hyperinflation take off. That's more of a process, so I'm doubtful that that's going to be what happens. So I lean more towards the war avenue. I mean, have you looked at a map recently over like the past 18 years, because that's how long we've been in Afghanistan? Almost as long in Iraq. If you understand that we have Iran surrounded? Look at a map. Look at Iraq. Look at Afghanistan. And look where Iran is. Ooh, right in the middle of both of them. Got them surrounded, don't we? Now we're swimming around and floating around the Caribbean, right around Venezuela. Petrodollar, anybody? You understand the game that's being played here? You understand the geopolitics? You understand how fragile this system is? It's on a knife's edge. It's on a knife's edge. The rest of the world was waking up to this madness and insanity. Third world countries, everybody was protesting. COVID-19 comes. Sit down, shut up. Can't go out in the streets. Things have only gotten worse. It's a pressure cooker on steroids. Wait till these people are allowed to come back out on the streets. You think $1,200 is going to cut it here in the United States? It's going to have to be more. I mean, that's almost the only thing that is going to keep people from protesting heavily in this country is just more of the free money, more sit down, shut up money. That's it. That's it. Sad state of affairs. I wish I could bring you better news on a daily basis, but this is going to get much, much worse before it gets any better. The solution is free market capitalism. Allow the markets to solve these problems. Allow fresh young entrepreneurs to enter the marketplace. Allow them to take over at the helm of poorly managed corporations. Don't bail out the executives and the management that is there and allow them to stay. I mean, this doesn't make any sense whatsoever. Draining of the swamp? Are you kidding me? Are you paying attention to who is getting all of this money? Are you fine with the $3.8 trillion just for the fiscal year of 2020? And again, we have not seen anything yet. We're broke. Nobody wants our debt. Nobody's buying it except the Federal Reserve. And it pains me that I have to agree with Goldman Sachs, but Goldman Sachs is on every side of the issue, so everybody's going to agree with them at some point. No earnings. Who cares? That's it for the day, ladies and gentlemen. Thank you so much for joining me. Please like, share, subscribe, get the word out, and leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.